All right, good morning. It is 8 a.m. Central Time on Wednesday, August 23rd, 2023, and let's jump right into the trade preparation for today. So, heading into the open, our intermediate term bias continues to be bearish, and our short term bias is going to be neutral. And anytime our short term bias is neutral, we need to be much more aware of the real time intraday situation. On the downside, we're using 43.94 quarter to 44.0275 as initial support, and that is the intraday bias confirming zone. So if we get a successful breakdown below 43.94 quarter on broad market weakness and sustained downside momentum, then that would serve as an intraday bearish confirmation, and it can result in downside range expansion into 43.67 quarter to 75.75. And as long as the market holds initial support, our bias remains neutral, and there would still be potential for the market to continue balancing within yesterday's range. So there is potential for a long setup at initial support, and if we get a breakdown below that area, because it would trigger an intraday bearish confirmation, we can also consider shorting the breakdown below initial support. And in this case, our high probability target is going to be 84, and our final target is going to be 75.75. So we can see that the expected risk reward is 1.5 in this situation. So we have a couple of options here. One is we can either look for more on the downside via our high probability. So maybe we look for a move closer to 75.75. So we'll set this for now to 78.75. And at the same time, we might be able to use a smaller stop depending on the launching point of the breakdown. So for example, if the market balances at initial support and then the launching point of the downside move is around 43.98 or 99, then we don't necessarily need our stop to be all the way up at 44.01.5. We can probably get away with it at 4400, and now we can get over 2R into the 78.75 level and 75.75. And let's see if we can just move this a little bit back up and 2R. So right now we're going to set this up for 2R down into 75.75. And if we get out at 82, then we end up getting just 1.6R. So that's the thing with setting up a trade that has 2R potential. And this is something I've covered in the live recaps, that when you optimize the trade for 2R, then when it doesn't work out quite as you expected, you typically end up getting less than that. But if you can find a trade where there is 3 or 4R potential, on those trades, many times, even if it doesn't work out exactly as anticipated, you can still get 2R out of it. Now, keep in mind that these are downside targets and they're not guaranteed to be downside exits. So, for example, if the market is liquidating on excess weakness and above average volume, then we know that the market does not have to stop at 75.75. So, in real time, we can always adjust our high probability target to be closer to the zone, and on the final, maybe we can get more out of it. Maybe the market is going to actually take out the recent lows and head down into the 67 quarter or 70 area. So my point is that this is simply a preparation tool to be ready to execute in the moment. And just because it says 2.5R over here doesn't mean that we're actually going to get that. That is what we anticipate to get based on our anticipated targets. But anytime we're setting targets, it's really just an educated guess. There's obviously never a guarantee that the market will get there. So these things will require adjustments and tweaks in real time. And that's even more the case when the short-term bias is neutral. So if we break 94 quarter, then the focus is going to be on the short side, as long as that breakdown is happening on sustained downside momentum. On the upside, we have pre-market resistance at 44.09 to 15. That is the most aggressive area of resistance, And given that our short-term bias is neutral, I think the area calls for caution. It doesn't mean that we're not open to shorting it, but we will need to see something in real time to take a short setup at 44.09 to 15, because location alone is not going to provide sufficient edge at 44.09 to 15. The only time that zone works is when the market is weak enough to eventually break down below initial support. But if in real time we're not seeing any sign of intraday weakness via a bearish divergence on the advanced decline or sustained downside momentum on the tick or some sort of bearish disconnect with the other markets, then 44.09 purely based on location is not going to be good enough for a short. Above that, we have initial resistance at 44.21 to 25.5. We can set up a short over there, but again, whether I take it or not is going to depend on the real-time intraday situation, because if the market is heading back up into the overnight high area on clear signs of initiative buying, so if in the moment we are seeing broad market strength and sustained upside momentum and the other markets are also participating in the upside move, then the market does not necessarily have to stop at initial resistance. Now 44.21 to 25.5 is the intraday bias changing zone. So on first attempt, sellers may still be active there, but we are going to have to assess the day time frame and determine whether we are seeing sufficient strength to take that area out. So if the market is heading higher and we're seeing plus 700 to 1000 on the NYSE tick, well then shorting that area may not make sense anymore, and the potential would be there for a breakout above it and a test of yesterday's RTH high at 31 to 32. And if we take out yesterday's RTH high, then the probability of upside continuation would be significantly higher. And in that situation, the market could easily tag 35.5 to 42.5 and even the 49.75 to 59.75 area. So I think that if today is going to turn out to be a bearish day, then we should hold below initial resistance and ideally below pre-market resistance, and then put in the breakdown below initial support. If we end up taking out initial resistance and especially yesterday's high, then the possibility or the probability of a downside move is going to be significantly reduced, and in that situation the market could end up tagging the 47 level and 49.75 to 59.75. So if we're going to take a short purely based on trade location, then I think we need to wait for the market to get exhausted into a zone like 35.5 to 42.5 or 49.75 to 59.75. So on the upside, 44.21 to 25.5 is the intraday bias changing zone, and 35.5 to 42.5 is the intraday bias confirming zone. And those tend to be the stronger and more significant inflection points. So 21 to 25.5 is a potential short, but we will need to assess the real-time situation. And in this case, I'm just going to set the target for now back to 44.0275, and eventually we might expand that. So 21.5 is going to give us 3R, and at 35.5 to 42.5, I'm not going to target a move all the way back down to initial support, because I think if the market gets there, the likelihood of a big reversal is going to be much lower. Yesterday, the context was different. The market was testing that area for the first time. It was exhausted into it in the overnight session, so the selling there made much more sense. Now, if we go back up to 35.5 to 42.5, it would be yet another test of the same area of resistance, and we can still get a response there, but the likelihood of a bigger reversal is going to be much lower. So I think we're going to have to be much more conservative with our targets here. I think we can look for a move to 25.5 as the high probability, and in this case we may not really go much beyond the 21 to 25.5 area on the downside. it would require a momentum shift in real time for that to happen. So I'm going to set up the trade just looking for a move down into 25 half. So I'm essentially setting it up as a zone fade for tradable reaction. So you can see that getting that type of trade going would require a much more conservative entry at 40 quarter. And if we take the most aggressive entry, that would be 38 quarter, and that would be for 2R. So for now, I'm going to leave this as the most aggressive entry at 38 quarter. And then in the moment, we might change the final target to be perhaps the 15 high volume node or something. But for now, I think this is a safe bet. And then 49.75 to 59.75 is a zone that marks the average range potential. So that's where the market would be hitting the average range potential. And we would need to see above average volume in order for the market to push beyond 49.75 to 59.75. So I think that is still an area that can work as a good shorting opportunity, especially on first test, and especially if the market is exhausted into that area. So I'm going to leave this the way that it's set up by default. Scale target 47 quarter. High probability is ahead of yesterday's high, and the final is 25 half, which is the broken initial resistance zone. And if we only get to 32, it's still 2.7R. So I think setting up the trade this way is pretty safe, because even if we don't get our targets, getting 1.5 to 2R out of it still seems relatively doable. And then 44.63 quarter, 71 quarter marks a range extreme, and that can also work as a good shorting opportunity. And as long as the market is not testing that zone in the last hour or the last 30 minutes, I think this zone will end up holding, and it has potential to cap the upside on the day. So that is going to be it on the short side. So potentially a short at 21 half, potentially 38 quarter, much more confident with 54, 65 quarter, unlikely to get hit. On the downside, as far as going long below 43.94 quarter goes, I think we're going to have to be much more careful on the long side below yesterday's low, because as I mentioned in the morning trade plan, our intermediate time frame bias is bearish. So if we break down below initial support, and that is our intraday bias confirming zone, which means that a break and hold below it gives us an intraday bearish confirmation. Well, with the intermediate time frame bias being bearish, that means that a breakdown below yesterday's low would trigger a certain level of bearish time frame alignment. And that's why we need to be much more careful on taking longs below yesterday's low, because a proper breakdown below yesterday's low on clear signs of initiative selling would have potential to take the market down into 43.67 quarters, 75.75, and even 46 to 55. So we need to be much more careful fading that type of environment. I think if the market gets exhausted into the 46 to 55 zone, given that it marks a range extreme, I think a reaction there is relatively high odds, unless the market is selling off into that zone in the last hour or the last 30 minutes. In that case, we could just liquidate. But if we test that area earlier in the morning or perhaps around lunch hour, I think we'll still get a response there, if nothing else, just from short covering. But it will depend on how the market approaches 46 to 55 and when the market tests that zone. And we're only going to look for a tradable reaction at that zone. So we're not looking for like a major reversal or anything like that. I think just a bounce back into 67 quarter is what I would look for. And you can see that 49.75 gives us 3R, and the most aggressive entry would be 51 half. So that's our execution zone here, 49.75 to 51 half. And at 67 quarter, if buyers step in, I think we'll probably just bounce to the 84 area. So again, not looking for much. off of those lower support zones. So that means we would need to get 69 quarter. And the most aggressive entry here, if we chase, is 71 half. So that also gives me a bit of an idea on what to expect from the balance breakdown. So for example, if the 69 quarter has 3R potential just for a move back to 84, then I definitely don't want my final target to be 69 quarter. I think over here we're going to adjust the final target to 72, and we'll adjust the high probability down into the top of that zone. So we'll just front run it by a couple of ticks, 76 quarter. So I think that we can use to optimize the intraday balance breakdown, and that is something that you'll see me do relatively frequently, where I will use the ideal entries on the long side to help inform my targets on the short side. All right, guys, I think that's going to be a wrap on today. As always, if you found this video to be helpful, then please like and share it with other traders. Good luck and good trading today, and I will catch you in the next one.